Thanks everybody for joining. I think this has been a wild year. I think December of 2019, if you had said 18 months from now we're going to have the largest business conference, will be a crypto conference or Bitcoin conference in Miami, and Doge will be worth almost $1, I think everybody would have laughed at you, but here we are. So my name is Jesse Proudman. I got started in crypto in 2017, so I've been a lifelong entrepreneur. I actually went to college with Nick Carey from blockchain.com and Eric Voorhees from Shapeshift, and regretfully didn't pay enough attention to what they were doing early on because I was running my prior startup, which was a cloud computing company. So sold that company to IBM in June of 2015. And the last year at IBM, I was a distinguished engineer and entrepreneur in residence, effectively working with IBM Ventures to launch a blockchain-focused accelerator. So during the last run-up, last prior market cycle, my job was to sort of understand the lay of the land here. IBM came back at the end of Q3, basically said no money to launch the accelerator, and I decided to go back to my entrepreneurial roots. And so founded a company called Strix Leviathan in January of 2018. And Strix Leviathan is a quantitative investment management firm. So we run hedge funds in the crypto space. In January of this year, we just spun out a new company called Makara, which is crypto's first robo-advisory, with the objective of taking this asset class and making it approachable and accessible to everyday people. But I'm here to talk about a Bitcoin ETF, because this is a topic that, as long as I've been involved in this industry, has been a topic of conversation sort of day in, day out. 2018, as the prices started to decline, the two sort of repetitive drum beats that we kept hearing were, one, institutional capital will come in and save the space, and two, a Bitcoin ETF will be here and it will save the space. And one of those two things has materialized in the last couple of years, one is not. But there's been the entire industry has had this philosophy that we need a Bitcoin ETF to be successful, to reach this point of credibility. And I think the reality, like our perspective, is that that's actually incorrect. It's actually a hurtful innovation to the space. But it keeps coming up in every conversation. And it's really, to some extent, it's been a holy grail for many large banks and fintech startups in the space. As of now, there's over a dozen S1s filed with the SEC, 4 companies trying to launch different forms of a Bitcoin ETF in the US. And so you've got institutions from Fidelity to WisdomTree to Van Eck. You've got firms like Bitwise. All of these entities are putting significant effort behind sort of the regulatory process and really working with the SEC to try to gain acceptance on these type of products. Really because, I mean, they think it can open up a rather large market, and quite frankly, the business model is quite lucrative. If we look internationally, this is not sort of a new concept. In Brazil, there's an ETF called #11 or #11. This is more of a broad-based crypto ETF. In Canada, you've got BTCC, which launched recently. So regulators in other countries have accepted this premise that you can have an exchange-traded fund for this asset class. But here in the US, still the SEC has shied away from approvals. We already have exchange-traded products to some extent. So if we look at the industry, you've got products from Grayscale, you've got products from Bitwise, you've got products from BlockFi. These are exchange-traded trusts, slightly different from an exchange-traded fund. But they're there, they're available. You can go in your brokerage accounts today and buy these offerings. And they have some problems. Specifically, they're really expensive. Like, they're not wonderful investment products for folks. They have high management fees from an annualized perspective, 2 to 3%. More importantly, they aren't necessarily trading exactly at par value of the asset. So they either trade at a premium or a discount to NAV. GBTC, Grayscale's Bitcoin Trust, has traded at a premium to NAV for quite some time, up until recently, which is now trading at a discount. But these can be material value. So at some point, yep. What? Oh, NAV is net asset value. So the value of the underlying assets in the trust compared to the value of the trust itself. So you're paying more than what the trust is worth, or paying less than what the trust is worth in this construct. And some of these products, this premium can be as high as 100 to at one point, the Litecoin Trust with Grayscale's product line was 7,000% premium to NAV. So people are just sort of jumping into these products without kind of understanding that ramification. And then additionally, because of the structure, the regulatory structure that they're using, these offerings have different perks that are available to institutional investors that aren't available to retail investors. So specifically, the ability to go mint new shares of these trusts requires sort of large capital contributions and accreditation. So if we back up, like, why do people actually want a Bitcoin ETF? What's the point? And at the end of the day, it's really, I think, an ease of access problem. And this is an issue this entire industry, the entire Bitcoin industry has. It's too hard for everyday people to understand and get involved in this space. And so an ETF is the objective there is to wrap sort of the complexity of access here in a familiar and comfortable framework. So you can go with this type of product, you can go to your brokerage account that you already have, you buy the ETF, and now you're in the space. It solves that confusion and complexity issue. And really, it solves a distribution issue. As an ETF is available on all these brokerage accounts, sort of anybody can participate who has brokerage access. You don't have to go to one of these exchanges, go through the KYC process we've all done 15 times. It's just a simpler process.
Why do you think one won't be approved by the SEC?
I think we will see one that will be approved by the SEC. I 100% think we eventually will get there. The question was, why don't I think one will be approved? I think it's just a matter of time. I mean, the concerns that the SEC have presented are effectively market manipulation, market structure, and volatility. And I think those are valid concerns, particularly the volatility piece, and we'll get to that here in 1 second. I think if you look at the wealth management crowd, like financial advisors who manage individuals' wealth, they want this product. And they want this product predominantly because financial advisors sell products that they can charge fees on. And they can't charge fees on your Coinbase account. They can charge fees on an ETF. They can charge fees on GBTC. So coming up with a product that allows financial advisors access for their clients into the space, but also allows those advisors to be able to bill fees, that's really important. And so that's an interesting piece for these financial advisors. But if we back up, like, why Bitcoin at all? This whole technology, the ability of having provable digital ownership, came out of the 2008 recession. And so the premise here was, let's invent a new technology that can sort of get rid of or replace or supplement the traditional financial system. And we've seen sort of incredible development and innovation here in this asset class over the last more than a decade. So if we think about that as the genesis of this technology, then why a Bitcoin ETF? Sort of wrapping this innovation, this technology in a traditional Wall Street wrapper is actually the antithesis of Bitcoin. So the first big problem I see here is really it's a liquidity concern. And this, I think, is one of the major concerns with the SEC. So if you take Bitcoin and you wrap it in an ETF, it is available on sort of 9 to 5 banker hours. It's actually available fewer number of hours than it is available. Or excuse me, it's not available a larger number of hours than it is available. So when the stock market closes, you have no more access to that liquidity. And if we think through the major volatility events in this asset class, and now sort of 3.5 years in, I've been through more than I can remember. They almost all happen after hours. Sort of Thanksgiving is a reliable time to see some kind of volatility event. New Year's Eve, we typically see some kind of event. The crash 2 weeks ago, that was after hours in the US, or last night with Elon tweeting. These are all events that happen after hours. And so your ability to exit your position or enter your position, if you want to add additional shares in the midst of one of these events, it goes away. And so you could enter a weekend and exit a weekend and have your portfolio value halved and have no ability to do anything about it in that construct. So it's not actually helpful. It's a hurtful construct for people gaining access in that, with that capability. So the other big piece that we like to think about, it's Bitcoin. It's more than just an asset. It's sort of a technology revolution. It's an innovative process, and just taking a wrapper that takes that construct and puts sort of the banker stamp of approval on it means that you're not actually participating in the ecosystem that you're investing in. It means you're not actually holding the physical coins. Those aren't your assets. If you ever want to transfer them out to have actual ownership of those for whatever reason, or you decide you want to start lending those coins, or you want to, we see new innovations happen on the network, and there's different things that you want to be able to do with them. You can't. They're not your actual coins. They're wrapped up in this structure. So you're not actually participating in the Bitcoin ecosystem. You're just buying sort of this fictional representation attempting to sort of benefit from the price action. So our belief, like again, if we go back to the origins of Bitcoin, this entire asset class, Bitcoin specifically, was created to replace and supplement what's happening on Wall Street. The goal here was to create a technology that eliminates the meddling that happens within our financial networks, that removes that centralization from Wall Street, it removes the centralization from government actors. And I think that the entire industry has succeeded in building a really incredible platform doing exactly that. Yet here we are with an ETF, which the industry has been saying, this will save the space, or we need this to really legitimize the space. And we're kind of getting away from the entire premise of what the space was created for, what Bitcoin was created for. So we believe that new investors getting exposure to the space, they really should invest in crypto. They should be participating in Bitcoin. They should hold the physical asset, not this Wall Street product, not this wrapper. So that's my spiel. On the Makar side, as crypto's first robo-advisor, our goal is really to welcome new investors to this asset class. So almost everybody in the room, I bet everybody in the room is already participating here. We already have exchange accounts. We're all holding Bitcoin today. But we all have friends that every day are sitting here texting us saying, how do I participate? And for most people, that exchange process, it's just too hard. People don't get it. And so our objective here was to take the language that we all have learned, the lexicon that we have all learned, and translate that into normal, everyday human language. And in doing so, allowing new market participants, people that aren't already in this asset class, to come participate and join us. So we launched 2 weeks ago. You can follow me on Twitter at Jesse Proudman, or check out Makara at makara.com, and appreciate your time.